let's say you bought one of these 150 calls at $380 there. Boom, you just bought it. How much is that option worth? Intrinsic value. What is the intrinsic value of this option at our 50% price objective? It's the 50% rule, that price, minus the strike price. What number is that? That's $38, right? Didn't we say the price target was 188 minus 150 is $38? But the ultimate objective on this damn trade is 10x.
Yeah.
I don't know. Is anybody interested in 10xing their money?
For elite, it sounds good to me.
My hunch is that whatever rally is going to happen on this thing, it's probably going to happen into that window where Bitcoin's going ape shit. Solana's threatening to overtake Ethereum in market cap and all that kind of talk. This thing will pay you. And, I even put a challenge to the current level 3 students. Can we use things like Kenny Roberts' silver options insurance plan to even leverage returns? Like, what would happen if we go shopping for like $150 call option? Obviously, it's going to be like super duper cheap. Well, relatively speaking. And can we buy multiples of them where we take advantage of the deltas? And oh, look at that. Steven's going to do all our homework here. So scroll down. Oh yeah, I can see January 2026. So there are the leaps. So this is the option that I would probably be interested in. And then let's see if we can find what's the $150 call option right now.
68
there it
bucks.
is. So it's it's only $3.75. Fuck me. And what's the delta? Can you click on it?
Is it 375? 150 strike. Is that correct?
Yeah, 150 strike. And the calls
on the right, correct?
Those are the puts.
Oh,
they're only $380. Yeah, go and grab that chart. So really the question I would have here is what's the delta? Oh, I mean, look at that chart. Fuck me. So what's the delta on this thing? My hunch is the delta, if you go back to the quote panel, if you go back to option price, right, and then scroll up, and we want to see the Greeks.
Where how do I show the Greeks? It's gonna be on the top.
So on the left-hand side, you see what says volatility in Greeks. There we go. So what's the delta on this thing?
Here we go.
Yeah. So we want the 150. You're going to have to, go.
All the
there you go. Yep. Good. So, isn't that interesting? Steven's going to do all our research and homework here for us. All right. So, where's delta? There it is. So, delta is 0.19. So, that means that basically, let's call it 0.2. That means that if you buy 5 of these things and you combine all of the deltas, then what that means is the 5 of the options combined will move the same as the underlying stock. So stock moves up $1. 5 of these options combined will move up $1. 5 of these options at $400 a piece means that this is about a $2,000 trade. Now, what happens to those deltas when price gets above that 150 level?
They do this.
Yeah, you can see. In fact, where's the stock price right now?
80, is it?
So you can see deltas would go, just at the money, deltas would go from 0.2 to 0.6. So that means that the 5 of the options would then, at that point, with it being at the money, have a cumulative delta of what, like 3.5 to 1?
3.
Now, what happens if these options go deeply in the money? Go back to the BABA chart, and what was our 50% rule?
188.
So that means that 150 call, what's the intrinsic value of that call option at $188?
$38.
So what's the delta of an option that's $30 in the money right now?
$30 in the money, 50.82.
Look how close we're getting to 1-to-1. What's the option on the $40 in the money? Because $40 is what we think. Now we're starting to get close to 1-to-1. If we have 5 of these, then that means every $1 movement, say from $188 to $189, our options move a cumulative $5. Do you see how this works? This is what we teach you in the level 3 program. So this is a way that you can use the expanding deltas to make even more money. But let's just do some simple math. Let's say you bought one of these 150 calls at $380 there. Boom, you just bought it. How much is that option worth? Intrinsic value. We're not going to take time value. We're not going to take implied volatility. We're not even going to take prevailing interest rates. That's what rho is, the effect of interest rate changes on options price. We're not going to take any of that into effect. We're just going to simply ask, what is the intrinsic value of this option at our 50% price objective? Can somebody tell me that? It's the 50% rule, that price, minus the strike price. What number is that? That's $38, right? Didn't we say the price target was 188 minus 50?
Yeah.
150 is
It's a 10x.
$38. So just buying one of these options, I always think it's a good idea to buy multiples, and then that way you can sell half on a double, get your original money back, blah, 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 blah. But the ultimate objective on this damn trade is 10x.
Yeah.
I don't know. Is anybody interested in 10xing their money?
For elite, it sounds good to me.
Yeah.
Something you can hold on to for a long time.
So this is where we use our technical analysis to outsmart the market, because the market right now is not thinking that this stock's going to go back up to 180. Now, using 180, that's conservative. Do me a favor, Stephen, and put a Foggenbaum off of this huge W that's potentially forming here. Yeah, off of that high, back down to these recent lows. Where's 2.618?
Right.
There's
right
$210. What's the intrinsic value of these 150 calls there?
We're doing 210 minus 150, 60.
$60. So that's now we're starting to talk about like 15x on just one option. And what happens if you go and buy 5 of them? What's is the delta going to be near 1? You think that deeply in the money? I think so.
Yeah, like 0.9, 0.95.
The amount of money to be made here is insane.
Yeah, this is a good play.